We got inflation data this morning, and I wanted to talk about TLT, the ETF for the 20 plus bond yields, as well as TMF ETF. Both of these, I have a long-term position on TLT ETF. I know a lot of you guys have been following me based upon that, and I want to break down my strategy for that going throughout 2025. I believe the stock market is not going any higher. I believe that Trump himself is going to produce some inflationary policies, and this is going to rock the markets and the economy across the board slowly. Frog in boiling water, kind of slowly. I've been trading TMF ETF more and more. I usually front run economic data. I did it again with yesterday's data point. PPI, of course, came in softer, and I've expected bond yields to shift lower yesterday. Got into TMF thinking I'd get a little bit of juice out of that. Didn't work. Jumped back in with options instead. What I'm doing is I'm using that money to buy more and more and more TLT ETF from my profits from TMF ETF. Let me break everything down. My content strategy for 2025. My trading strategy for 2025 based on the stock market for 2025, and of course the bond market. I've been doing a lot more content. You can certainly count on that going throughout this year. Let's jump in and I'll break everything down for you. Here's a quick look. Core CPI month over month change, barely. So we did get a couple increases over the previous 2 months. It's flat, but the year over year is still pretty high. All right, so this drives everything. Plus, next Monday, the 20th, 5 days. Today's the 15th, yes. This drives everything moving forward. Now, how am I going to kind of go through this? First off, probably my real only holding at this point is TLT ETF. The reason being is I believe interest rates are too high at this point, but a lot of this belief system came in right around, I want to say March, late spring. There was a dip in TLT ETF. We had a big dip previously, and I still was not on board, and I passed that up. Then we had another dip with TLT ETF. Bought in a lot at 87.50. We're now below that. But prior to that, TLT ETF had moved to 100. I figured 110, 115. That's when I was going to start taking profits. Then around September, people started realizing some old man fell asleep and could barely speak cognizantly. So he stepped aside, I guess in July. And then the other old guy was going to take place. So the market started shifting. Trump's policies are inflationary across the board. There's 3 things I want to break down. I will continue to buy more and more TLT ETF. I'm day trading TMF ETF. You get a little more juice in there. It's like 2x, it might be 3x. I'm not sure exactly the mechanics behind how they do that. I know they're using forwards, but there's some inflationary numbers involved in that using forwards. So you're really looking for no more than 2 days. You're in, you're out. For me, I'm always front running. Whenever there's an economic data point, I kind of look at the whole picture, bring it in, and ask the question, what's going to happen here? How's the market going to perceive that? How can I make money in the stock market? And that's really what this 2025 is really going to be about. I think we're going to see some big shifts in the U.S. economy. I don't know that they're necessarily positive that the stock market's going to just keep going and going. I absolutely do not believe that at all, because I believe in Trump's policies are not going to benefit the hamsters on the hamster wheel. So my goal, make money in the stock market all through 2025. I'm really going in on this. Now, Substack. I have a Substack newsletter, and I'm going to try and hit one newsletter per week, looking at various sectors, bringing in the economy and how that affects the various sectors plus the entire big picture. You'll want to follow me on Substack at a minimum. If you follow me, you get my notes. And what I've been doing, I started doing it last week, I think. Whenever I put a trade up, I'm immediately putting up the information on that. And the reason being is that's sort of one of the things I really want to kind of develop. But if you really want to follow me along as to what I'm doing with regard to how I'm building up my TLT ETF position, I'm trading TMF because you get more juice out of that. And because of that, the profits from my TMF trades, I'm going to continue to buy more and more and more TLT. I am putting that information up on my notes on my Substack. You can follow me on that. You don't get my email from that. You can subscribe to my email. You'll get the email, and it's usually a chart, a paragraph, a video. Then the paid subscription is below that. Should you be a paid subscriber? Thank you for the support. So I do my YouTubes. I've been doing shorts. TikTok, I guess, is gone in hours, like literally this weekend. Who knows? I've been repurposing my shorts up on TikTok. We'll see how that plays out. Okay, let's talk about Trump for a second, because this is everything. Inflation for right now, the rate of growth on a monthly basis, if we maintain sort of this flatline number, the Fed would eventually hit its target rate. There's this massive hurdle called Trump in the way. For now, the year over year, and I can actually advance to that, the year over year consumer price index change, it did decline somewhat, but it's still elevated. It's still not at the 2% level. Let's talk about Trump's tax cuts. Trump added about $1.5 trillion to the deficit because of his tax cuts. Those tax cuts affect corporations. 70% of this economy is driven by consumers. I don't really want to have any more arguments with anybody else. Consumers and corporations are not the same person. If you give a tax cut to a corporation, it doesn't help out the pay for the consumers, which drives over 70% of this economy. He's paying who he's paying. Great, that's policy. Awesome. That policy will add more and more to the deficit. It did before, it will continue to do so. What saved Trump was the Fed, COVID, because when COVID hit, the Federal Reserve stepped in and just consumed every ounce of debt they could. This alleviated the pressure from institutions having to buy that debt. Well, the Federal Reserve is unwinding Q1, Q2, Q3, and Q4 right now. So not only will we see more debt, we see less customer. So institutions are going to have to be brought in from outside of investing whatever they were previously investing in. And the way you do that is you lower price. With debt, that means higher interest rates. Not a linear relationship, but you get the idea. Next, we've got, so Trump's tax cuts don't really help out pushing this economy further. Two reasons. Number one, they're already there. It's not going to jolt anything further. Number two, it's going to add more debt, which is inflationary because long-term interest rates, which take a look at the 10, long-term interest rates are moving higher. The mortgage rates are moving back up ever since the realization of what Trump is going to be doing. The next thing he's going to do is tariffs. This immediately hits consumers. I can't stress this enough, and I'm really no longer interested in having this conversation because some people look at one thing and think that's the answer to everything. You first have to look at the tax cuts. The next thing, combined, you have to look at the tariffs. It's a zero-sum game. On average, I think Americans earn what, $1,000 a week, 52,000. I think it's 60,000, whatever it is. That's the median income. It's a zero-sum game. So if Trump taxes imports into the country, and who cares why? It's a negotiation tactic, whatever. It's a tax right now on consumers. Consumers will pay that. If they're paying that tax, zero-sum game. That money goes to the government, which great, would pay for the excessive deficit. But we get less consumption, which means the economy effectively starts to erode away. It is a zero-sum game. The next thing we need to look at, so you've got the tariffs, you've got the tax cuts, then you've got the Federal Reserve in response to this sometime down the road, and that's where TLT ETF really kind of comes in. So we've seen the response by the markets regarding what's going on with the future of interest rates, the future of inflation, things like this. With the tax cuts pushing the long end of the year because of excessive debt, with the tariffs taxing consumers, you'll see the revenues will decline slowly. Frog in a boiling water situation. Because of that, eventually the Federal Reserve would be able to lower interest rates after the initial price shocks of the tariffs. Consumer goods are probably going to go up about anywhere from 3.5% to 7.5%. We'll see how that plays out. Because of that, the long end of the curve would start, or the short end of the curve would start to move lower in the long run. Then the Federal Reserve will have to really start juicing the economy to keep it moving forward, meaning keep interest rates lower to catch up that deficit to keep the economy moving forward. It's inflationary. This isn't a good thing. So eventually I see interest rates moving lower, but I see the money supply moving higher. So that's where I'm coming in with TLT ETF and TMF ETF. My strategy, day trade, hour, less than a week, 2 days, 3 days, whatever it might be, TMF. Take the profits, buy TLT. I know some people are doing some things differently. This is what I'm doing, my strategy. Because of that extra juice in TMF, I'm going to push it, pull out what I can, buy TLT. It's literally trading Paul to buy Peter, if we can switch that up. Core CPI, annual. Sure, we went flat month over month. We're still elevated. Real far away from the 2% target rate. Here's a good look. This is actually TMF itself. As you can see, it's shot up higher. Now, I had bought it. So I had bought SQQQ last week going into non-farm payrolls. Did pretty well with that. I expected a hot number. The market apparently was completely blindsided by that. On Friday, got out of a big chunk of my SQQQ ETF. Took a little more profit Monday, got out of everything else after a soft PPI number Tuesday. There was just no more juice left in that. And I thought, well, I'm not sitting on this, because what happens if we get a soft number for CPI? Stock market will rally, bond yields would fall, TLT and TMF will go higher. So yesterday, I got out of the SQQQ ETF trade that I had from last week. I did pretty well with it. Going into yesterday, I bought into TMF thinking, I might be able to pick up like 50 cents or something like that. I picked up a dime. That didn't work out, so I got out of that, put another trade on TMF, but this time I strangled the market, buying puts and calls. And clearly that worked out. I figured something's going to happen today with the number, and from that, it will be a pretty decent move. I still wasn't 100% sure as to what that move might be, because there is a correlation between PPI and CPI, but there could be surprises. The surprise was to the downside, actually. And you can see what happened with TMF here. Next, this is TLT itself. We're pushing back up to 86.5, 87 range. I'm going to continue to buy this. And let me kind of keep moving forward. Here's a look at SPY stock, SPY ETF, and its reaction as well. So the market pretty much moved, considering we have softer inflation. I think the market was really worried, or concerned is probably the better word, and that concern has been removed. In fact, I saw the VIX itself had fallen considerably. And what we're looking at here is, this is actually the VIX itself, volatility index. So this shows you that there's some relief going on with the market itself. Now, long term, TLT again. What's going on here? How am I looking to trade this? I don't know that we're necessarily going to see a big dip in TLT ETF moving forward. I think that the long end of the curve will be pressured, but here's another variable we need to keep in mind. If the stock market, we will see, once we get the tariffs, we know we're getting the tax cuts. Once we get the tariffs, the consumer will start to grind lower and lower their consumption rate because of the tax that the consumers are going to have to pay, which means less and less revenue growth for corporations and profits, which means a stock market that will not move higher and higher and higher ad infinitum. Because of that, players are going to look and say, well, I can get 4.6% yield out of the 10. The stock market might move lower 1%. I'll buy on the dip, but in the meantime, I'm going to park my money in U.S. Treasuries. That's a guarantee. And if I see an opportunity to get into the stock market, I'll take that opportunity. So if you start to kind of shift and look backwards and say, okay, yeah, you know what? Corporations are probably going to see a little less revenue, meaning a little less profits, meaning stock prices are going to move lower. Individuals will sit there, and there's something like $7 trillion in cash sitting on the sidelines. They're going to step in and start buying these bonds or U.S. Treasuries and pulling out 4.5% interest over the course of a year versus the potential of a sell-off or a move lower in the stock market. There's some certainty there. That would actually keep long-end bonds price elevated somewhat. So TLT itself, I don't see this as going to be a sinking ship, that there's going to be a lot of moves forward. At the same time, though, I mean, Trump, we're sitting at 1.2, 120% debt to GDP. Trump could easily push 130, 140% easily with these policies. We're going to see more debt to GDP. There's going to be a certain point where it's completely unsustainable. And that's it for the United States of America. Just check out Ray Dalio. He's taken a real kind of classic look backwards. I look at the population growth rate and say, how does this debt get paid? There's less and less people. How do we move forward? How do I move forward? I'm going to make money in the stock market. And that's how I'm looking at this. I don't really care much about the collapse of the American empire as much as, fine, how do I make money on this? For now, figure everything else out along the way. TLT ETF, I don't see moving too much lower. I see supports. I don't think we're going to see runaway. And I'll continue to buy over the course of the next, say, 3, 4, 6 months. But I am data dependent as well. If I put any kind of information up there with my videos and things like this, it's really kind of hey, listen, on Thursday we got something coming up. And this video might be coming out on, say, Tuesday. Here's what I'm looking to do. Go to my Substack. Follow me so you get those notes. You get a little pop-up ding on your iPad or your iPhone, whatever it might be. And from there, you'll see the information that what I'm doing pretty close to real time, less than an hour. And from there, again, for me, my strategy, I'm going to day trade TMF. I do use a lot of options trading, but like some of these inverse ETFs I've been talking about lately, they're interesting because a lot of people's mentality, buy, buy, buy. So I'm kind of incorporating those well because I know from a content creation perspective, that's some of the things that some guys are looking for. As it turns out, I like some of these instruments. I'm like, wow, that's kind of easy, and it's 2x my kind of numbers. Let's do this. Make sure to stop by my Substack, get those notes. That's just a follow, totally free. If you want to support the site, of course, Substack newsletter subscription, $8.50 a month. Beyond that, like, follow here. We'll see you in the next video. I'm moving forward. Let's see what happens day one, which is Monday.